Hi everyone. Oh, what, that? Yeah, life got in the way again. Life got in the way again. So it's a good job that I work for myself, isn't it? And that basically I only need one hand. And this is my left hand, and I am left-handed, but it's okay because I can use the mouse with my right hand. And that's all I need to trade. That's all I need. So I made some trade videos for you, videos of my live trades, and I'm going to show you them in a minute. And I'm going to show you them, and what I want you to notice is basically they all look the same. I make different amounts of money, or lose occasionally different amounts of money, but actually the trades all look the same. And that's what you want as a professional trader. Is your brain loves familiarity, and it gets really good at figuring things out that are familiar to you. And so once you've done this, once you've learnt this, you know, this is near enough the gold system, although not quite on this occasion. The gold system's better than this, but it's along the same sort of principles. We're using momentum, so we're waiting for a trend to develop in a market, and we're then waiting for a pullback, and then we're capitalizing. So when the market is, let's say, going down, and price pulls back up and then goes back down again, we're looking to take the trade from there down to there. And so, yeah, that's what we're doing today, is we're trading along with the principles that I set for myself. I always look for the 3 C's: context, content, and confluence. Okay, and they're all in my gold system. So anybody using that will have the 3 C's. Therefore, because you know the system, you don't need to worry about 3 C's. You know, they're all in the system, and as long as you adhere to the system, then you've got that. You know, and discipline is the only thing that I can't give you. I just can't give you discipline. I can't make you wait for trades. And trading is quite a lot of it is waiting for the market to be in position. You know, the gold system that I use, the system I'm trading, will provide regular trades, and I keep checking different time frames to see whether there's a gold system trade coming up, because it works on any market, any time frame. And I keep checking to see if there are trades on other time frames whilst I'm sitting trading, because I don't sit trading for long. You know, my arm starts aching. But that's enough. I know that you're probably sympathetic, and thank you, but I'm all right. Yeah, so we're going to go through these live trades in a minute. One of them is on the Nasdaq, and the other 2 are on the Dow. Okay, not right on the open, but you know, within an hour and a half of the open. And so we're going to go through those now. I'm going to talk you through the trades, but I want you to notice the entries. I want you to notice the entries. I'll talk you through the exits, but I want you to notice the entries, and they'll all look pretty much the same. The same principle: trend, advancement of the trend, pullback, and then I pounce. And I pounce at the river of value. So let's say the river of value is here, and the market comes down, pulls back up. If it goes through, I wait for it to come back down, and as it's leaving the river of value, that's where I enter. If it just goes up and then starts pulling back down without going through, then I'll enter there. Okay, same the other way around. Price comes down, hits the river of value, starts rising, I'll enter long. Price comes down, hits the river of value, I'll enter long just above the river of value. So it's this river of value that effectively I'm trading, and I'm relying on institutions who do trade based on averages, average price. I'm relying on them to help me with the price moving in my direction. And very often my prices, they go straight into profit. And then I can concentrate straight away on where I'm going to take profit and make money. And that's a really nice thing to have, straight into profit. That's what you want with your trades, because it relaxes you. It makes you feel confident when you're taking winning trades. And they don't exist on every candlestick. You have to wait for them. And so concentrate on seeing the entries and seeing that they're the same in principle to what I've just described on every single one. Okay, let's have a look at this then. Right, so this is the 5-minute chart on the left. This is the 1-minute chart on the right. I've gone short here 2 minutes ago, and the market is in a downtrend. This is the Nasdaq, and you can see on both charts the market's in a severe downtrend. Slight pullback to the river of value here, and just pausing because that's around about these close low. This close low here is a possible turning point, so I'll be looking to get out around about the low of this candlestick here, if we can get down there again. Here we go. Hopefully this is going to take us down now, and if it doesn't, then I should have got out there and then. But it's all looking good at the moment. It's all looking good, still looking good, although not as good as it was, of course, but we're still going down. And that's okay, nothing to worry about here. So although I was too busy talking, we can wait a little bit to get a good price to exit at. And we're reaching prior lows now. There, broken the low, so just wait for a sec. Looking good. Now we're going to be taking an exit here. There, that was a good exit. And so I've just frozen this because I entered here. Now you'll remember seeing that it dithered around the price up and down within this little section here. This was a pause just outside the river of value, kept going back in, up and down, but you'll notice that there, after that, price started closing below the river of value, and it was really only a question of time before price went like a bullet down here. And so that's what you're looking for. You're looking for price to form a trend, then go back up here to the river of value and come down. Now there it closed just above the 8 EMA, and that one it closed just below the EMA. And so that's where you're looking to take your entry, when it's just below the 8 EMA, and then you've got a red bodied candlestick, great, followed by a green bodied candlestick, but that green body there, as you can see, actually closed below the river of value, so you can expect a punch downwards, which is exactly what we got. So even when that went up here, you can still expect the candlestick to close down, and that shakes people out. I was thinking I should have taken my profits here at the low of this candlestick, and then price went back up, and that's very often where people get shaken out. It shakes people out, they take a loss, and then the market does exactly what they thought it would do. Well, when all the signals remain the same and the reason for the trade is still valid, then you can stay in that trade. And look, the 8 EMA here is acting as resistance to higher prices, as you can see here, and you've got a potential resistance in here of the 20 EMA. You've also got a resistance level with this prior high here and this prior high here, all helping you, all convincing. Eventually traders and computers see these and they realize price has got to go down. And even when it goes back up after that, if all of these indicators still remain the same, you can see the same thing happened here. Price went down, big red candlestick, came back up, and there is a big red candlestick followed by, you know, a close below the 8, visit back up, and you can go short in there and short again there. And you're always retracing basically the steps that have been taken previously. The market punches down, comes back, and you're retracing the steps. Now I left it a little bit longer there because, rather than take my profits there, because you could see price was moving quickly, and when price is moving quickly like that, there's a good chance it's going to carry on down. Price moves in waves, and when you're in a wave that's going in your direction, it's worth just hanging on. If you're trading in something like this, which is a small trading range, then you need to be quicker on the button. Your mouse needs to be quicker, and you wait for maybe price to come down here and then you enter short, but you've got to get out quick because price is in a trading range and it's uncertain really in this range whether it's going to go up, or whether it's going to continue down. It's more clear when you look at these signals here. And again, this is the 5-minute chart, but there are no closes in here above the river of value. Was here, but not in here, so anything short in there would be good, and you use the shorter term time frame chart to get your entries. And so that was a good trade. So I've gone short again here. This is the Dow now. This is the Dow, and you can see the same entry, same trade, and I've missed my exit there. I'm going to take it because it's a long way from the 8 EMA, and so there we've taken profits once again, and we've got to wait for more opportunities to present themselves if we're going to take more trades. So I'm just going to have a look down through some other charts now to see what opportunities, if any, are presenting themselves. That's the higher time frame, 2-hour chart, daily chart. Everything's down in these markets, pointing down in these markets at the moment. And you can see here there's a red candlestick forming, and I might be looking for a short now because right there, see, it went back up to the river, started rejecting down, just waited for that, and I'm going to take a quick profit in just a second. There. There we go. That was super quick trade. And so just going back on this now then, look at this. Market came down. That red candlestick there was bigger than that green candlestick and encouraged follow through, got follow through, started going down, pulled back, went down, pulled back, went down, and then we got a green candlestick with a tail on the bottom. These are tails they don't mean price is going to go straight back up. They just mean that when price gets back down here, the price might start going up again. So when price went back to this river of value and started rejecting down, You saw that I took my entry just below the 8 EMA, the bottom of the river, and took my exit before the spikes, before the bulls could get in there again. So I hope you learned something from all of that. Real good fun doing this for you. And do let me know if you want more information on my gold system. You can go ahead and look on the Excellence Assured website. We sell that system on there. And you can join the Trading Academy at Excellence Assured through that and get personal tutoring from me. So do hope that you learned something from that. You've got to have a method for all of this, and you've got to wait for the right indicators to occur. You've got to wait for your 3 C's, context, content and confluence, and then you can take a trade, and they all look the same. You'll have noticed from those entries they all look the same trade, and they weren't 3 separate trades, 3 winners. That's a good day. And 2 different markets, all on the 1 minute time frame, trading time frame. Markets were active during that period, and that was good fun. Anyway, let me know if you've got any questions. Do subscribe to the channel if you're interested in seeing more of these type of videos. Do appreciate your company. Comments below. Catch you later. Bye for now.